Everybody, it is Thursday, the 17th of November, and it's time to take a look at our stocks here. We are long shares of IDTI at $23.41. As we like to do, or as I like to do, I suggest taking a third off as it hits daily R2 on that first day. So we took a third off with a gain of 39 cents. We did not puke our position on the open as it opened lower. Instead, we gave it some time, and now it's turning into a nicer winner here. As I suggested midday today, I think it's wise to sell another third above $24.90. So hopefully we get that in the morning. Maybe we see a gap higher would be the best case scenario, and I would feed a little bit out into that, and the balance on the stop would then be at $24.15. So we're going to give it a little bit of room, in other words, the way down below today's lows. If that's too low for you, maybe you want to put it underneath this high. If this is too tight for you, then perhaps put your stop underneath that rising 5-day moving average, and that will allow you to maybe hold it for a couple weeks. I don't think you're going to get a lot more profit out of it, but you never know. Again, make the trades your own always. Shares of Juniper we were involved in as well, and we got involved in this one at 25.64. We took a third off initially as it rallied 30 cents, and then the stop on the balance today, what happened was we again, as I'd mentioned in the midday video and in chat, we don't sell first thing when it gaps lower. Instead, we observe it. And then we had raised our stop to this point as of the midday, I'm sorry, in the chat room. Midday video, I had raised the stop to right here. So if you personally decided to have your stop still below the low of the day, you're still in this trade. If you took the suggestion that I had to put it underneath this level, then we were stopped out of the balance of this position with a gain of 36 cents a share. If you're still in it and you want more advice about the stock, I would say, if you held through today, then your stop would either go below today's low or underneath this 5-day moving average with this low. Either way, again, as always, make the trade your own. Ask questions if you have any concerns about where a stop should be for anticipated different time frame holding. Shares of Envision, INVN, InvenSense, we got long at 788, and our stop right now, well, we had taken a third of it off at $7 at $8, and again, that was for a 12-cent gain. Again, not the reason that we get involved in a stock. We're not here to trade for 12 cents a share, but we're here to reduce our risk a little bit, and that gave us the opportunity to do so in INVN. The stop on the balance right now is going to go to $7.89 a share in this stock, and that will assure that we don't take a loss on any shares, and we've already covered any commission costs plus a little bit extra. So even if we get stopped out, it's not a loss. GNRC, we got involved in this one this morning, not on the gap higher, of course, but as I'd mentioned, as it got back above this level, so a little bit higher than what we actually wanted to pay, but we got involved at $41.50, and as always, we look to take a third off just to reduce the risk in case it fails. So we took a gain of 21 cents a share, 22 cents a share on a third of the position, and the stop on the balance right now is going to go below today's low, so $41.05 a share. It's set up nicely, I still think, 7 million shares short, and it broke an important resistance level. If that stop seems tight to you, maybe you want to put your stop underneath the rising 5-day moving average in this little low. I'm trying to show you guys the concepts. I talk about how to make, I talk about make the trade your own, and now I'm trying to give you the concepts so that if you, want to trade on a tight, with tighter stops or looser stops, I'm going to try to start making a case for alternative stops. Our official stops are just going to be the way that I track it. That's all it is. It doesn't mean that's how you should trade the stock. You should trade it according to your risk parameters and other things. So but once they are they hit our official stops, then I will discontinue following them, just in the name of not following 30, 40 stocks at a time, and making these videos a half hour long each time. MXL we got long today at $21.60. So we've had this one on our watch list for 3 or 4 days, and it finally took off here. So looking at a 10-minute time frame, we got involved at $21 and wait a minute. excuse me, which one am I looking at? MXL. I'm confused. I'm sorry. They were out of order on my notes. We got involved at $21.61 a share. And again, we took a third off at daily R2, not because that was, anything significant other than a good place to take a little bit of risk off. If you did it, you took a third off for a gain of 20 cents a share. And I'm going to say now that the stop on the balance goes to $21.75 a share. That gives us a little bit of room. And if that's too tight for you, then I would say, maybe below this rising 5-day moving average would be an alternative stop. Shares of ZTO we got involved in today as well. This one behaved well for us, and after purchasing at 14.62, we took a third off at daily R2, and that was good for a gain of 25 cents a share. Stop on the balance right now is going to go just under here at $14.95 a share, and we will sell the entire position if it gets up towards that volume weighted average price above 16 bucks a share. Again, we're not looking for anything more than a bounce up towards the volume weighted average price since the IPO, and selling it a little bit ahead of that I think is wise. So we'll look to sell it at 16 if it gets there. Otherwise, the stop on the balance is $14.95. If you want a tighter stop, looser stop rather, maybe you go below the 5-day moving average. FMC is a new one for tomorrow, and this one you can see is holding tight after breaking higher here a couple weeks ago. Looking at the weekly time frame, where it kind of looks, actually, if you look at GNRC, let me erase that, GNRC here, and then you look at FMC, they almost look identical, the way that the stock had this longer base and broke higher. Now it's consolidating in a pretty tight range, and we've got this 5-day moving average is declining slightly. However, that will change first thing tomorrow morning when we get rid of this data here. So within the first 20 minutes, we get rid of that data and replace it with data where we just turn sideways. It will begin to start to turn higher here. So what we will want to do then is buy it above the high of the last couple days, not today's high, but the high of Wednesday here, which was $54.14. We'll want to buy it above 54.14, and our stop then would go below today's low, which also gives us protection under that 5-day moving average, so $53.35. If you wanted to keep a tighter stop, let's say it doesn't decline in the morning but just goes up like this, then you might want to set your stop under here as a tighter place. I think that if we get up towards daily R2, that would certainly be a time to raise the stop. General Motors, GM, you can see here since the election, I've got the volume weighted average price there. We've got a rising 5-day moving average, and here's just a nice tight consolidation after a bullish break of some resistance here. So when we back it up a little bit, you can see General Motors has some room to run. It's not what I consider to be a great trading stock, generally speaking, because it's choppy and it doesn't have large ranges, but it's set up nicely here. And I think that if you get this one back above the highs of the last couple days here, this little peak at right there, that also gets it above that volume weighted average price. So buying it above 33.61, I think you could set your stop underneath today's low, or not even under today's low because that was too much of a shakeout, but underneath here. So $32.95 is what I would suggest for a stop in that one. Now for some names to keep an eye on, just as watch list ideas. And these watch list ideas, as we know, often become very good winners, but they're just not officially tracked. Biogen, BIIB, you can see, this was one of the ones last year that actually led to, they broke down before the rest of the biotechs, and it was right here when the biotechs really got hit because of Biogen. Anyways, this stock now has had a lot of time where if they didn't scare you out, they would have worn you out. And now what we see, if we've got a 10-week above a 20, above a 30, above a rising 40-week moving average, and we've just tested that 40-week or 200-day moving average. So longer term, it's looking like it's in this stage 2 uptrend on the weekly time frame. Perhaps it's an investment consideration if that's your time frame. We gapped higher twice in the last couple weeks, and this most recent gap, you can see we're holding on to in a pretty tight range, and it doesn't look like it's quite ready to go yet. It might have to get back above the peak that we had seen on Wednesday, or the highs of this week, basically, because we gapped down last Friday. But the highs of this week, should be able to get this thing going once again. The 5-day moving average will flatten out in the morning. So Biogen IDEC is a good one to keep an eye on. Worst case stop, I would say, would be underneath this consolidation low that we've seen this week. And maybe that one can, who knows, maybe this one gets the biotechs, to go up and close this gap in here even on Biogen. If they've got good fundamentals and you're an investor, I'd look at this one and consider it as maybe a possibility for an investment. Las Vegas Sands, this one on the weekly time frame is in a stage 2 uptrend. We've got, what we had over here was higher highs and higher lows with rising moving averages. We saw moving averages crisscross. Then we saw a breakdown with lower highs and lower lows below all these declining moving averages. We had sucker rallies above the longer term moving averages that were still declining right in here. And now what we see, however, is with this higher high right here as we broke this resistance on the weekly time frame with that point a rising 10, 20, 30 and 40 week moving average, that we're in a nice stage 2 uptrend on this weekly time frame, and this prior resistance seemingly holding as support as well. And on the daily time frame, we're a little bit in range bound in here. Here's the bigger range that we've been in. We could actually extend that back a little bit, but this is the band of resistance that we've seen, and this is the lower end of that support, and of course the mid range in here, right where we see that 20 and 50 day kind of clustered together. Looking at a 15-minute time frame, it gapped up today, and maybe it's a good day trade idea tomorrow. I don't know. It's not fully developed yet. I don't want to tell people it's a good swing trade above this high or this high, because that would be a little too far extended. So instead, it is less developed. Therefore, it is a watch list idea. And, figure out if it makes sense to you or something you want to look at further. We've mentioned MJN this week as a potential short candidate. And it's still, we're still in a bullish environment. It's probably got to get under this band of support. It's something to keep an eye on. That's all it is. We spoke about the volume weighted average price since this low and from this peak. We're below both of those. We're below the 5-day moving average, which will begin to decline once again tomorrow afternoon. So keep an eye on that one for the short side. On the long side, we've got another stock, which is Santander Consumer. Looking at this weekly time frame, you can see that we've broken some resistance here. It's kind of the same story. We had lower highs and lower lows with declining longer term moving averages on this weekly chart. We broke a higher high. This is where it entered a bull market on the weekly time frame. And then after these moving averages crisscrossed over in here, as it broke down to lower highs and lower lows, this is where it became a bear market for this stock, and it continued to decline with these declining moving averages. We had sucker rallies above the 50-day, the 100, the 150, and the 200-day moving average. But now that all of these longer term moving averages have flattened out and we've broken this resistance, we drill down to a daily time frame, and you can see it's a nice break higher in here, and it did so with an increase in volume. The volume is diminished as it's starting to consolidate its gains. So here's another one. Maybe this is an investment idea with it heading into a stage 2 uptrend again on the weekly time frame. It looks like it's got a lot of room. Maybe it heads up to $20 in the next 9 months. If you're an investor, I would look into it. I'm not an investor. I'm a swing trader. So I'd be looking to buy this above this recent band of resistance with a worst case stop under here. I think that I would prefer to see it hang out here a little bit. So that's why it's not an official idea. Maybe this is the next big thing. As Cisco, not Cisco Systems, but Cisco, what do they do? Like industrial food supply, I think. Anyways, this stock, it's had a nice run, and it's not typically what I consider a trading stock, but it rallied up. It found this prior resistance, is finding support, rising 10, 20, and 50-day moving average. Looking at a 15-minute time frame, it probably needs to get above this level. So let's just start keeping an eye on it.